The fourth learning objective is to record completion and sales of finished goods and the adjustment for under or over allocated overhead. As you know how to accumulate and assign the cost of direct materials, direct labor, and overhead to jobs, to complete the process we must do the following. Account for the completion of the sale of finished goods and adjust manufacturing overhead at the end of the period. To record the completion of a job, the cost of the job is transferred from work in process to finished goods. Finished goods is debited and work in process is credited. When the job is sold, two entries are needed. The first is to record the sale at the retail price. The second transfers the cost from the finished goods inventory to the cost of goods sold. These T accounts show the flow of costs through the accounts. When a job is completed, the amount is transferred from work in process to finished goods. When a job is sold, the cost is transferred to the cost of goods sold account. We end the period with other jobs started but not finished, $27,000 ending balance in work in process inventory, and jobs completed but not sold, $50,000 ending balance of finished goods inventory. The total debits to the manufacturing overhead account rarely equal the total credits. Why? Because Smart Touch allocates overhead to jobs using a predetermined manufacturing overhead rate that is based on estimates. The predetermined manufacturing overhead rate represents the expected relationship between overhead costs and the allocation base. In our example, the $5,400 debit balance of manufacturing overhead is called underallocated overhead because the manufacturing overhead allocated to work in process inventory was less than the actual overhead cost. If it had been overallocated instead, the manufacturing overhead account would have had a credit balance. Accountants adjust underallocated and overallocated overhead at the end of the period when closing the manufacturing overhead account. The closing the account means zeroing it out and adjusting cost of goods sold to its correct amount. Exercise 17-18 refers to the allocation of manufacturing overhead. The question is to compute the predetermined manufacturing overhead rate per direct labor dollar. 115,000 divided by 71,875. The predetermined manufacturing overhead rate per direct labor dollar is 160%. The journal entry to allocate overhead costs for the year would be to debit work in process inventory for $116,800 and to credit manufacturing inventory for the same amount. Use the T account to determine the amount of underallocated or overallocated manufacturing overhead. Prepare the journal entry to close the balance. The manufacturing overhead, by the way, is underallocated by $2,200. Now to close the balance of the manufacturing overhead account, we debit cost of goods sold for $2,200 and credit manufacturing overhead for the same.